Here, let's talk more about it with former Federal Reserve Vice Chair Donald Kohn. He joins us now. Do you think the Fed is done?
I'm not so sure. So I would, Bob's point about the door still being open, Jay Powell's comment about either we're okay or we need to raise. So I think they're still looking at the potential for raising. I agree that the presumption, because of the good inflation news over the summer, because the funds rate is already pretty high, particularly compared to that inflation news, because labor market pressures have moderated some. I think the presumption, and because of the tightening of the previous tightening of financial conditions, I think the presumption at the Fed has changed from we need to raise, now prove that we don't, to we're going to stay here, prove that we need to raise. But I think the door is still open, in Bob's words. I think they need to see below-trend growth. They need to see continued moderation of labor market pressures. And he didn't really get that from the most recent jolts or even the ECI numbers. They were kind of stable. They need to see that. They need to see wage growth continuing to come off. And most importantly, they need to see those inflation numbers validate the good numbers they got over the summer. So I don't think the story is over yet. I agree they're perhaps more likely to hold than to raise, but the market's really tilted in one direction quite far.
And the fight seems to really be in the long end of the curve. Don, we've said this big rally in 10 years. TLT, which is the longer-term Treasury bond ETF, has had tremendous inflows. People seem to be really buying that rather aggressively. Yield curve is steepening slightly, but still inverted. Where are we on the 10-year? That's where the battle seems to be right now.
Right. And the 10-year seems to be driving the other aspects of financial conditions. So the decline in the 10-year is encouraging the increase in equity prices. I don't know what's happened to the dollar. I assume the dollar has probably softened a little today with interest rates coming down. So that one of the things Jay Powell emphasized was they need to see these tighter financial conditions sustained. They're not being sustained right now. So we'll see where that goes and how that influences their outlook.
Yeah, dollar's down 0.75% right now, Donald. So it's counterproductive when he signals that they're done raising rates, when he's worried that financial conditions are making their job easier and doing the work for them.
So I wonder whether he meant the signal to be taken quite as strongly as the market has taken it. Yeah. It's very hard, these press conferences. He's reading some of those answers, but he's speaking off the cuff on others. And I think he kept emphasizing that they're not yet confident that they've gone far enough. And I think we ought to hear that.
Yeah, I mean, I wonder if he regrets doing a press conference at every meeting. Probably not, actually. He's very open and communicative. Donald, thank you very much for joining me. For joining us. Don Kohn.
Good to see you, Sarah.